oiling up today with the Ethereum price and across the crypto markets. What I want to talk to you about, in addition to this 1 hour chart on the Ethereum chart, is our trend line based chart. I'm going to be showing you exactly where I suspect the price is going. I have a very, very interesting prediction to share with you. I'm seeing a lot of confluence in the market right now, and it's all leading to one thing basically. So we're going to get into the chart and I'll be showing you exactly my levels, where I believe it's a good time to buy, if you should be buying now, and all of those questions answered. If that sounds good, guys, smash that like and subscribe if you want my future videos, of course. And by the way, if you're subscribed, turn that bell on. If you turn the bell on next to the subscribe button, that way you'll get notified when I post these time sensitive videos, so you'll get them as soon as possible. So guys, what I'm currently looking at on this hourly chart, this is the first pattern we're looking at. We have support currently approximately at around $2,365. That support has been in play now for the best part of 5 days. Okay, so it's quite a strong support line. The resistance line, however, is at about $2,500. Now, within this channel, we are struggling to break above 2.5 grand. Reason being is it's a Fibonacci retracement level on the bigger time frame. For example, if I zoom out a little bit, I go into this 4 hour, you can see this fib level. This orange line is exactly what's keeping us at resistance at the moment. So let me go back into the 1 hour and we'll experiment a bit further. What I've been doing is scalping. I've been trading this channel very nicely, very, very predictable. And the great thing about this boring price action, it's actually great to trade, if anything. So let's have a look at the chart to show us where is likely that we're heading next, because I'm seeing quite a lot of confluence. The first thing that you can look at here is we're in a couple of arcs, these triangular patterns. We've got one here and we've got a bigger one surrounding it that you could consider as well. Each one has its own target, and in addition to this target, because actually, for example, the first arc, you could look at it like that. You can go high to low, well, the width of the triangle, should I say. So if we break to the downside out of this, you're potentially looking at a target near enough down to our fib level, around $1,950, and that's ultimately where most analysts suspect it's going to go. Personally, I believe it will hit lower than that, maybe 1750 potentially, ultimately, before we rally back up in the bull cycle. However, of course, we could break to the upside out of this bigger arc. It's of course possible, and that would take us up to around 2,856. But how does that 2,856 $2,806 mark match up with our trend line chart? Because actually, what you can see, that level of 2,800, it's a strong line of resistance because it acted as previous support. If I follow that line down, support, probably more support down here. This is why we've got it in here. So it's a strong support line, but if we do rally up, if we do go bullish, that's where I would be targeting short term. But before you can go bullish, guys, before you go bullish, we have to break this resistance line, this trend line. It's currently at 2,500. It's going to be at that level for a day or so. So until we break 2.5, if we break 2.5, that's when I'll be going long. At the moment, I'm shorting, guys. In fact, I have a short position open on Bybit. I can get my Bybit account up just to show you the trade that I'm in, give you an update as of yesterday to show you exactly where I'm at. So on my Ethereum short, I'm currently $200 in the red. However, you know, that's fine. I'm in this for a long term. The profit I'm hoping to take is at the price of $1,858. Currently about $1,200 up on my XRP short. I got in a bit earlier on that. Guys, if you want these signals that I do in real time when I'm actually trading, I give them for free. Link is down below with the link, like I showed you before, this link here. So let's look further at this chart, the arcs that we have, because in addition to the arcs, you have this smaller arc as well. So like I said, bullish target, if we get there, is about 2,850. Bearish target, you have to consider down at around 1950, thereabouts. Within that, you also have the smaller arc, and this smaller arc is also needs to be targeted if we're going to do something here. And you're basically looking at the widest part of the triangle, which would look something like this. Where has it gone? Something like that. From there. So if we break to the upside out of this target, you're looking at a price of around $2,694. Well, we would need to break this level first. So you do need to take a look if we're breaking the $2,500, because until we break that, we're not going anywhere to the upside. If we break to the downside here, you can expect price of around 2,200. I think that's likely, probably over the weekend to hit. It looks like we are going bearish. In addition to this, so let's actually move these arcs, and I'm going to show you something as well that I think you'll find very interesting in terms of trading or looking for lower prices to buy more crypto, because I think everybody's waiting now. Everyone's bought the dip and now we're waiting to buy the second dip, right? I think that's what's happening. Leave your comments below and let me know if that's the case with you. The other thing you can see here is we have the width of the channel, and one way or another we're going to break up or down. If we break down, again, 2,150. If we break up, you could consider about $2,650. So that's how we're currently looking as far as that goes, as far as we're trading. The other thing, of course, we can look at is this daily chart. Now, the daily chart is obviously a great barometer of seeing where we're at in the grand scheme of things. Now, if we are entering bear market, some saying we're in a bear market, some saying not yet, some saying we definitely are. But you have to consider this, guys. If you bring in the Fibonacci retracement levels from the previous, well, let's start from this bottom, for example, from where 23rd of June, we're about $1,600. That's the wrong tool, guys. Let's bring in our fib level. So here, low, high. You can see we're currently being supported by the 0.786. So basically, in terms of your more midterm trade strategy, if you are waiting for lower prices, we're waiting to break around $2,350. If we break that on the daily chart, you're going to expect prices down at around 1,900. Reason being, if you take the longer term Fibonacci retracement level, because this is from the previous cycle within the run, if you like, if you go right to March 2020, where the bottom of the total bull market is, you've got your golden pocket down at around $1,960, guys. So personally, I'm holding out for those levels. I think we're going to hit those levels. I can't say when exactly. It might be in the next 72 hours. It might be in a week. It might be in a month. Probably not as long as a month, but I suspect. I mean, you can equally look. I mean, you only need to see how patterns repeat themselves. Okay. I mean, look at this. You have the high, the drop, the kind of dead cat bounce. Same thing's happening right now. We might come up here. We're probably going to drop. I mean, you can even apply this tool here, which is really interesting to use. It's our ghost feed. For example, you've got something like so you got like that. I'll show you exactly what this does. This is a really cool tool. So basically, it gives you a strong idea of how patterns repeat themselves. So what you can expect is something like that, and you can't see it very well. Let me change the opacity or the transparency, whatever they want to call it. But this is exactly what patterns do in the charts. You can see how that's likely to repeat and be a continuation of the pattern, and it would still be within, you know, a support line. You don't necessarily need to break anything crazy. It would only be sort of within the realms of support, resistance, for example. So yeah, that's how I'm looking. That's how I'm looking at the market right now, guys.